The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.
Welcome back to another episode here at the IRA Club podcast with your host, Ramez Fakhoury, where we are going to talk about everything and anything AI related with my good friend and CEO, Randy Tate of iFlip, and how we allow our IRA Club members to diversify a portion of their retirement dollars into an AI-driven platform, which we are very much excited about. And here to introduce you to the AI platform is Mr. Randy Tate. And a very close friend of mine has developed a platform, an AI platform that helps in particular retirement accounts, IRAs, 401ks, 403bs, preserve and again, reduce market volatility by offsetting those big drops. Randy, listen, it's not going to do you justice if I sit there and introduce yourself. Please give everybody who is listening a bird's eye view. And I'm going to get into a little bit of a story of like how you and I met. And I thought it was absolutely hilarious. It was very coincidental. But Randy, without further ado.
Thanks, Ramez. Yeah, we're very excited and happy to be part of the IRA Club family. You know, we put a lot of stock in you guys. And like you said, we've become good friends over the years. And, Flip has an interesting story. I don't tell it very often, and when you ask me to tell it beforehand, I'm like, okay, that'll be interesting because it's a little bit different. So, quickly on my background, I'm a high school teacher by trade. I spent the first 10 years of my professional career teaching high school science and coaching football and wrestling. It's all I thought I ever wanted to do. I do live in California, and the cost of living is prohibitive to that profession. So we'll just leave it at that.
Very true.
So I became an entrepreneur, started a business, grew it quite well and quite large, and in less than 4 years. And we were able to be fortunate enough to sell it to a multi-billion-dollar publicly traded company. And that was a great deal for me. Then I had to work with that company for 5 years. So I spent 5 years there. And in that 5 years, though, I started another business teaching, educating, coaching businesses. It made perfect sense. I was a teacher. I like to teach. Started traveling all over the world, and apparently I had a knack for teaching and coaching, and which that was my background. Did that. Ended up selling that company. Then I got the company I sold it to, though, really helped me understand and learn the intricacies of software, which I was loving it, flying to Chandler. I was commuting to Chandler, Arizona from California. And that's where I met my current business partner, co-founder, Kelly Korchak. And that's where the brains of Flip come to be. You know, we are truly flipping the stock market on its head. The traditional way people invest, we are changing it completely. As I tell you the rest of this story, I want you to think of Flip as Netflix and traditional finance as Blockbuster. And that is the absolute truth.
Great analogy. Great analogy. Yeah.
We're better. We're less risky. We're much easier to use, much simpler on the end user, and we're a fraction of the cost. So how did that be? Well, my business partner, Kelly Korchak, give you a little bit about him. Pretty smart dude. IQ of 186, went to Stanford's physics program when he was 16 years old, and graduated and started managing money for the elite of Wall Street. Kelly and I had a mutual friend. He introduced me to him. My friend introduced me to him over beer and chicken wings. We had a couple conversations over the weeks as I was in Arizona, and Kelly said that the world doesn't realize, American specific, doesn't realize that Wall Street passes the risk of investing to Main Street. Main Street absorbs the risk. Like, say more about that. What do you mean? He said, well, if you believe for 1 minute that BlackRock and JP Morgan are investing in the very products that are putting out to the public for them to invest in, you're crazy. That's not how they invest their money. They don't take that kind of risk. So a few beers later, a few conversations later, next thing you know, the concept of Flip was born. And the idea is to put the power of institutional billionaire investors, the power of the tools they have and the way they do it in the hand of everyone. The vision of our company is to empower everyone to preserve, protect, and grow wealth. And we say everyone, we mean everyone. Little as $500, you can have your account managed actively with software driven by AI that does it all for you automatically. And so it is an intriguing story, Ramez, when you think about it. And so then we started out into the world. I started going out and speaking on stages, seeing if there was an appetite for this thing before we go completely build it. That's where I met you.
And that's where I was going to jump in and say there was a great story behind all of this. And for those of you joining for the first time, and I've spoken about this in previous episodes, and again, if you're new to the IRA Club, we are a self-directed IRA company where we allow you to take a portion of your retirement dollars to invest in alternative assets, right? Whether it's real estate, land, syndications, private equity deals, anything your heart desires. But the only thing obviously that we can't do for you is choose the investment for the investor. But let's go back 5 years. One of the things that there's this, and Randy, you know this firsthand, there's this misconception that IRA Club, our industry as a whole, has an issue with the stock market. We don't have an issue with the stock market. We like the stock market. What we believe in is diversifying one's retirement portfolio. And Randy, this is something you also truly believe in. Diversification is key, that you shouldn't leave all of your retirement dollars or even your personal funds into any one asset class. So again, diversification is always the key, always understand that. But let's go back to the story. 5 years ago, we've always had this little hole, okay, that we couldn't never figure out with especially individuals who are just very new to the self-directed world. We never had a solution for them. Like if I wanted to self-direct, to give them the option to pick their own stocks, to give them the option to choose their own alternative investment. For example, I'm not going to get into regulations, but to find opportunities for non-accredited investors. However, that was phase one. Phase two was we never had a solution for our current IRA Club clients, which was, what do we do with the money? So for example, your IRA bought a house on 123 Green Street, or you jumped in a private equity deal, or you invested in gold, or whatever the case may be, right? Now, these royalties, rentals, dividends would all come back to your IRA Club account. Now, every couple quarters, by the end of the year, you have $5, $10, $15, $20, $30,000 sitting in your retirement account. And IRA Club never had a solution for our personal clients to diversify into such a low entry level or barrier to entry in another alternative investment. So what do you think when our IRA Club clients used to call the IRA Club and say, hey, what can I do with this money that's just sitting in my retirement account? Well, again, 4 years ago, we never had a solution. So they used to shift their money right back over to the classical brokerage firms. In particular, I always like the analogy of using the big three, Fidelity, Vanguard, and Schwab. They pretty much control it all. And I thought to Dennis, I thought to a couple of my other colleagues, Vanessa, and I said, we need a solution, okay? And we need to get a trading platform to allow our clients to invest in the stock market, okay? So then one of the things that Randy knows about me very well is I'll do a lot of homework, all right, background checks before I jump into anything. So sure enough, I'm at an event 5 years ago, and I heard this gentleman, Mr. Randy Tate, on stage speaking about iFlip and this AI technology. And I was very intrigued. So I started doing a little bit of homework on Randy. Randy never knew this, by the way. I just wanted to let everybody know this. So what I did was I personally invested into, into iFlip without a Randy or Kelly or anybody at the iFlip team knowing this. And I wanted to follow up with a stop. Pause. Dennis, you can't jump in. I'm in the middle. I am. This is the podcast. All right. So Dennis just walked into it. By the way, guys, Dennis just happened to come in. This is our president, our fearless leader. If you are jumping in, maybe this is a good thing.
It's a memo on. I didn't get the shirt memo.
Yeah, that's right.
Yep. Yeah. And Dennis was part of actually who was listening to this whole conversation. But where the story gets actually funny is without Kelly or anybody knowing or Randy, I actually went upon myself to kind of educate myself a little bit about the AI. Again, this is 5 years ago. Nobody really understood it. I didn't even know it existed, to be honest with you. So what I did was I matched up what I had inside a Vanguard account that I had, and I moved everything over and kind of replicated the aggressive smart folio. And Randy, you're going to get into a little bit later, talk about these AI smart folios. But I decided to copy the aggressive smart folio. And I never said anything to anybody for almost a year. And let me tell you something. This was back around 2021, leading into 2022, when the markets were very volatile during that time, where most IRAs and 401ks lost about 20 to 23%. And by the way, these are numbers that you should go Google yourself. And it wasn't even close. The AI shattered what I was doing at Vanguard, which intrigued me, right, and Dennis to have a conversation with Randy and Kelly. And I thought, what a great product to offer our current IRA Club clients to help protect and preserve their retirement accounts. Because, Randy, you know this more than anybody. The American mindset's always been set it and forget it with retirement accounts. Like set it up, put the money in, leave it alone, let it do its thing. But I don't preferably like, and Dennis knows this, returns, right? 6, 7, 8%. Because that's what the average return on investment is when you look at things decade by decade within your IRAs and 401ks. We believe in trying to, number one, alternatives. We believe in utilizing the stock market here, in particular, iFlip's AI smart folios. But with that being said, Randy, here's the issue and the conversations I always used to get starting from day one. Wait a second. AI doesn't even exist in this space yet. This was, remember, 4 or 5 years ago. 1, 2, this is just a robo-advisor, right? That was the second question I get. Well, what's the difference between a robo-advisor and the actual AI? So I'm going to actually jump in and let's talk about this out loud between you and I. What is the difference between a robo-advisor and what the actual AI is doing? Because that is the number one question that I receive here at the IRA Club throughout these past 4 or 5 years.
Ramez, it comes down to the reality of an algorithm versus AI machine learning. So a robo-advisor is a simple algorithmic trader. They're everywhere. Robo is a fancy word that people think means automated or the computer's doing it for me. It's not the case. If you see the word algo, you see the word robo, you see Schwab's intelligent portfolios, those are all algorithms. So what we got to do is back up. What's an algorithm? An algorithm is simply a mathematical formula that says if this, then that. Let me give you an example of a robo. This is even beyond robo, but this would be like an algorithmic trader you might hear an ad for on, one of the business channels. If Apple, is more than 3% above its 200-day moving average, buy it or sell it. And then the computer would execute that, programmed by a human. The human went in and said, okay, I think that if this happens, the computer should do it. It's just an automation sequence. It's all it is. There is no active investing. Robos don't actively pull your money out. If you look at the traditional advisory world, they get paid on a fee structure called AUM, assets under management. So for that asset to be under management, it has to be invested. So they have zero motivation to pull you out of the market. They'll tell you, these are the things that you'll hear. Write it out. The market always goes ups and down, but in the end, it will always be out. They say that all the time. They also say things like, you must be diversified inside the stock market, meaning own lots and lots of symbols. Both of those are incorrect, and they are made specifically to get you to stay invested and not touch it.
100%.
AI, on the other hand, is a different animal. So the way it works, let me give you an example of how it works with us and and we are the only ones doing this today. This is the way it'll always be done in the future, but for now, this is where we're it. So the algorithm, we have an algorithm on every single stock that's in our system. So that algorithm will simply tell you yes or no. At the beginning of the day, it will determine whether or not you should be in that individual stock or out. That's where it starts. But the algorithm doesn't get to make that decision. It reports to the machine learned AI. It's an overlay on top of the algorithm. The machine learning may or may not agree. If it agrees, it lets the algorithm do it at once. Now, remember, the algorithm, nobody watches it except for a human. So we're no different than a human on a simple algo or robo. If you have real AI, though, the AI can not only override the algorithm like a human could, it can change it also like a human could, but it does so in a manner that's not biased, doesn't have an opinion.
No human emotion.
Deeply rooted in mathematics.
Yep.
And so we know that our software's intention is to never let an account get more than 10% off of its all-time high, which you can't do. And in any 5-year window, beat the S&P 500. Here's the other key piece. Don't ask an advisor or me, what's the performance been? How has it done? What was the return? Wrong question. If you only care about performance, buy lottery tickets. They have the best performance you can ever get. The absolute performance is fantastic. Now, we know that I'm being joking, but that's the truth. What you really want to know is what is the risk taken to get the performance received. If you're taking zero risk and you get a 3% performance, that's, you're not risking anything. That's where you're going to be. So you need to manage that. If you're talking to your traditional advisors, there's a couple of things you want to know. You want to know what is the beta? Meaning, what's the risk? The beta is the thing that compares you to the S&P 500. So you can match the performance of the S&P 500 by simply going and getting a free E-Trade account or even a free flip account and putting it in the SPY, which is the ETF that trades the S&P 500. It's going to do exactly that. You're going to absorb all the reward. You're also going to get all the risk. Our smart folios with the AI in mind is designed, not 100% perfect, but it is designed to beat the S&P 500 over time. That's the intention, with half the risk of owning the S&P 500. That's the thing. A beta of 0.5 or 0.6. And on our real conservative stuff, the beta is like 0.2, which the lower the beta, the better. A beta of 1 means you equal the S&P 500 in risk.
Randy, for those of you that are listening, and I'm just wondering, I've never heard the story. How did you come up with the name Smartfolio? And what is it?
Yeah, a smart folio is what the regular world would think of as a portfolio, except this one's smart. It trades for you. It does all the work automatically. It's truly a set it and forget it, but actively managing it. And it's all self-directed. It's not regulated by the feds, the SEC, FINRA, all those guys. They would like to regulate us, but we're an information platform. We're here to give you information and options. You're also on our platform. Welcome to just buy and sell your own stocks. We just provide these smart folios as a tool that you may want to use. And if you want to use it, great. If you pick that tool, you pick the tool, you pick how much money you want to put in it, it will then automate right away the next day.
So the next question, you brought up, and I was smiling when you were talking about this, fiduciaries, registered investment advisors, broker dealers. I like to call it in our world, meaning your world, artificial restrictions, right? They tell you what you cannot do within your retirement accounts. They try to flip it in a way to say these are prohibited transactions when they're not. But one of the other things that I wanted to drive home is when we first met 4 or 5 years ago, and this actually put a smile on your face. I said, I don't believe in percentage-based models, which is what the classical brokerage firms will offer you, typically between 1% to 3%. Randy talked about, having a whole pool of investments within your, let's say, example, your employer's 401k. We refer to them as mutual funds, which is large, mid, small, international stocks and bonds. That is their definition of diversification, not typically our definition of diversification, right? And you smiled when I said, I don't believe in percentage-based models either. And that actually internally made this partnership so much more stronger, because if you were, Randy, to explain what is the true difference between percentage-based models and flat fee models, and what is it that iFlip is actually charging versus the classical brokerage firms?
We give you a perfect example. I'll use it because it's easy math. You know, I'm going to give you a math question here, Ramez. What's 1% of a million?
Ooh, 10,000.
$10,000.
Yep.
So if you had $1 million invested in a traditional advisory, the least amount you could pay in fees would be about 10 grand. It's probably going to be a little more than that because there's other fees and stuff added in. It's usually ends up to be about 1.5 to 3, depending on where you're at.
Well, Randy, national average, I don't know if you know this, and something, again, you should go Google within, in particular, 401ks is 2.3%, give or take, national average. So obviously some more, some a little bit less, but to your point, it's a lot, 2%.
So now you're at 20 grand.
Yep.
You're in the national average. You're at 23 grand to be specific.
Yep.
For them to manage your money. With the Flip platform, including brokerage, all of it, the most in fees you would ever pay would be $1,500. So let that sink in. 1,500 versus 10 to 20,000. Our software, it's simple. We charge $7 a month. That's it. There's no hidden fees. There's no other criteria. There's no back doors. The broker, until you get to, is it 10 grand? 5 grand.
Yeah, 10 grand. Yeah, 10 grand.
Yeah.
I actually know your pricing by heart. Yeah, because that question comes up quite often with IRA Club. It's 10 grand. So from
10 grand, you pay no brokerage.
Yep. No. So from $1 to 10,000, it's 0, and then from 10,000 to 25,000, it is $10 a month. 25,000 to 50,000, I believe, is $40 a month. But you cap your flat fee model at $100,000 or more at $140 per month. So the actual number is 1,680. But think about what Randy just said to you. For per $100,000, the national average is about 2 grand. All right. So why is that so crucial for somebody to understand? The only time that you actually get paid is if the market is up. If the market is flat or down, are these classical brokerage firms, your fiduciaries, registered investment advisors, still taking their 1 to 2, potentially 3%? Of course they are.
With big numbers.
Yeah, big numbers. And iFlip doesn't really care. Like once it reaches 100,000, that's it. And to your point, you're not saving hundreds, not even thousands, but if you're
tens of thousands at scale,
tens, if not hundreds of thousands, when you're looking at it like from a 10-year standpoint or 15 or 20-year standpoint, the numbers actually get quite scary. And that's the power of compounding, that when your money grows, so does their, so do theirs. So, and again, and Randy, you know this, I don't have a problem and or issue with fiduciaries or registered investment advisors. You know this firsthand. I come from a massively big family. We have our fair share of fiduciaries and registered investment advisors. Everybody has to make a living. So, but I just think that this fee structure alone is too enticing for you not to at least look at, right? And Randy, let's drive this home. What does IRA Club charge its IRA Club clients to use the trading platform or the AI smart folios? 0. We don't even charge. Why am I doing this? Why is IRA Club doing this? Because we're trying to figure out ways to actually help our clients, right? We want you to utilize the stock market in a way that to grow it and accelerate it through iFlip. All right. And that's the name of the game, right? Keep as much as you can with your retirement account. This is not money that IRA Club or iFlip is taking from you on a percentage-based model. This is your money that they're taking from you. Randy, I want to follow it up with another question. And I know you can never talk numbers because past returns don't guarantee future returns, right? We all know that. And any investment that you do, it's about taking educated, calculated risks at the end of the day. What would you say the average savings protection that the AI has actually given to your clients in the last, say, 5 years?
Yeah, I'll give you a couple because these have been audited. The thing I tell people all the time is, if you have a stock portfolio, how did you do in 2022?
Yep.
That's the year that matters. That's the year that matters. If you were in a traditional investment place, you were probably down somewhere between 15 and 25%.
Yep.
And this is the year I like to brag about, because guess what? We were down too. But we were down on average 2.5 to 3.5%. That's where you make your money. It's missing the dips. Skipping those downturns is much more important than hitting the highs. You know, if you had $1 million about 20 years ago, Ramez, and you just bought the S&P and you held it the entire time, you'd have about 5 million now. That's pretty good. If you just bought that one thing and you rode all the ups and downs. However,
Well, what would you have inside of iFlip, just out of curiosity?
if you, let's just say it like this is the easier way to say it.
Okay.
If you, because advisors, remember, they want you to keep your money invested. They get paid because your money's invested. They will tell you half the story. That 5 million, if you'd have tried to time the market and miss just the 10 best days, if you miss just the 10 best days, you would have 2.5 million, not 5, on 10 days over 20 years. They don't tell you the rest of the story. If missing those 10 days, you also miss the 10 worst days, you wouldn't have 5 million, you'd have 10. So the key is that it's important to skip the dips. When the market goes up like this year, we're not going to be better than anybody else, because we are a little bit better, but it's not going to be eye-shattering or earth-breaking, because the market just went straight up. The market goes straight up. That's what we all do. Since inception, we're 100% or so, roughly, give or take, ahead of the S&P 500. We only invest in S&P 500 products. And so we're trading. You use the word trading. We call ourselves an investment platform, not necessarily even though you can trade on it.
So let's talk a little bit just about the process, the actual partnership between IRA Club and iFlip. So for those of you, again, that are listening for the very first time, this is something that's very intriguing to you, and you just want to learn more, please visit IRAclub.com, go to our resource and tool center. There's an actual full-blown breakdown of how this all works, but it all starts with opening the account. So understand what we built with iFlip is a fully integrated process for not just you, but all of our IRA Club clients. So once you open up an account, you will simultaneously get an iFlip account, right? Which is our trading platform. We are also fully integrated to a clearinghouse. So we do have the power to ACATS. And I'm not going to get into great detail about that, but just think of it like many of us know what a wire transfer or an ACH is, which is the movement of funds. And ACATS is not only the movement of funds, but the movement of securities. We could actually move over Amazon stock, Tesla stock, all of it could come over to the IRA Club, which is a really big deal in our industry. Most people don't have that. So opening is very easy. Simultaneously get an iFlip account. So you could do alternatives and you could do the stock market again at the same time. We just can't choose these investments for you. We give the power at a much lower rate, right? Flat fees, to do what makes you guys more happy and at the same time save more money. We could, again, the IRA Club could move the funds over from Fidelity, Vanguard, Schwab, Merrill Lynch, or one of the other 10,000 brokerage firms that are out there very seamlessly. And then you could move either the funds from IRA Club to your trading platform, which is the broker dealer called Optionality, which is, again, iFlip's is the tech company, to be clear. Optionality is the broker dealer, and go pick your own AI smart folios or go pick your own stocks. It's as simple as that. But Randy, if people wanted to learn more about iFlip, where can they reach you? How can they find you?
So yeah, our website, iflipinvest.com. Our YouTube channel, it's just iFlip Invest. You can see the little orange logo up there with a little F flame looking thing. And we do a thing called the AI Circle every 2 weeks where Kelly comes on live and explains. Those are all recorded, all placed on YouTube.
Very, very informative. I actually really enjoy those, Randy. I mean, really a brilliant mind. I call him a beautiful mind sometimes. I sit down and talk to this guy. I mean, this is the guy who actually created the AI for iFlip. And I highly, highly recommend anybody that is listening to this to join that YouTube channel. But Randy, if you have any final thoughts for our IRA Club clients and anybody that's new that's listening to this, what would it be?
Do your homework. Give me a call. Get with one of our team.
Schedule a demo.
Schedule a demo.
Yeah, schedule a demo. That's what I always say to people. Learn about it. That's the name of the game. I don't even mean to cut you off, but schedule a demo. You forgot to say that. And they could break down one of the team members at iFlip and just learn. That's why we do these podcasts, is to educate you what's out there, what's important for your retirement account. Again, and the name of the game is you need to take educated, calculated risks. This day and age, you can't solely rely on Social Security, Medicare, Medicaid. You got to think double-digit returns. You got to think about your legacy, your future, your family. And it is always one of the focuses and pillars of the IRA Club, including Randy and his organization, is education. Education is number one, and everything else will follow suit. But if you have any general questions with Randy, please reach out to him. If you would like to learn more about the IRA Club, feel free to visit us at iraclub.com. If you want to join us for any future podcasts, also please visit IRA Club /podcast and sign up and mention iFlip. And remember, we will never charge you the asset fee to actually trade. So it is $195 to become a member for your IRAs, HSAs, 401ks. And then moving forward, if you only want to use iFlip, remember, we don't charge the asset fee of $195. Randy just charges $7 a month, and we discussed that a little bit earlier. Other than that, when you sign up, you will get Dennis's latest book, Money Making Ideas with Your IRA and 401k. Unfortunately, Randy, this was written about 3 years ago. No, 2 years ago. And you're not on here about talking about the stock market and iFlip. But feel free to download that book. And until next time, we look forward to seeing you or you hearing from us soon. Randy, thanks, buddy. Always a pleasure.